Hi, my name is Fan Yang, your Chief Currency Analyst here at ForexMinute.com. You're watching today's Forex video briefing. It is Tuesday, December 9th, and we're in the middle of the US session. The Australian-New Zealand dollar pair has been consolidating in December after a bearish November. Let's see what we can expect as we await a breakout. At the end of October, the Aussie Kiwi was at 1.1304. At the start of December, price has fallen to 1.0757, and we can see in the 4-hour chart that in December price is essentially ranging between 1.0870 and 1.0760. Now, because of the prevailing downtrend in November and the fact that the RSI in the 4-hour chart is still holding below 60, we should say that the bearish bias is still alive. There's still bearish momentum, but that does not mean that we don't have any upside risk in the context of the current consolidation. The upside risk, there is still some upside risk towards 1.08, 65.70 area, but we should expect sellers in this 1.0870 to 1.09 area. Again, due to the prevailing downtrend. Now, the middle of the range is around 1.0810. If price starts to break above 1.0870 and maybe even 1.09, then comes back and holds above 1.0810, forgiving some near-term violation, like within the session. If it comes back up and holds above 1.010, then we might look for a bullish correction. We can then say that there's a price bottom that has formed in December. Otherwise, if price holds below 1.0810, or if it tries to break above this, tries to establish its price bottom but falls back below 1.0810, then the market is keeping the bearish bias and maybe even reviving the bearish outlook, as it might be doing today, with the threat of breaking below 1.0760. You see today price is now back below the 200, 150 simple moving averages. The RSI has held below 60. So if price can still hold below 1.0810, we would still have pressure to the downside. The thing is, we do in the US session, we are seeing this this is sort of engulfing bullish candle in the 4-hour chart, so we might see some further consolidation. Still, the overall picture is bearish, right? Now, let's go to the daily chart. Now, if the market does break below these lows, 1.07, let's say it breaks below 1.0750, 55, that would open up the 1.0650 area, 40 to 50 area, which represent the lows here in July. Okay, now if the market instead breaks to the upside and, like I said, holds above 1.0810 to establish this as a price bottom in December, then we could see a bullish correction. But again, we have to consider the fact that we had a bearish November, and this also broke below multi-month range support. So a rally should be seen as a bullish correction, a pullback, where we should anticipate sellers as price approaches this 1.0950, 1.10 area. Okay, the maximum bullish outlook we should have at this point, if there's a breakout from the current consolidation, is around this 1.1050 area. We can see that here at 1.1050, price will be testing a previous resistance support pivot, as well as where the 150-day simple moving averages reside. And that wraps up today's Forex video briefing. Thanks again for watching. Trade safe, trade well.